Do you get regular requests from your vendors for documentation to enable them discount their invoices for early payment from banks? And would you like to standardize the request and approval process for invoice financing and prevent potential litigation from vendors factoring invoices for jobs yet to be completed? Does your company have liquidity challenges and you're looking to align your receivables closer to your payables by extending your payment terms? Are you looking to grow and develop your contractor base by offering opportunities to competent contractors and still maintain a longer payable term? If any of the above resonates with you, then CAPSA is a perfect fit for your business. CAPSA has built a platform that enables a smarter path to cash at competitive rates within 48 hours for your vendors. How does CAPSA work? The vendor uploads invoice once the service is delivered. The anchor verifies invoice and the verified invoices moves to bidding page. The investors on the platform bids for the verified invoices at a competitive rate and the vendor selects the best bid, and CAPSA facilitates payments and settlement of the transaction. Only finance houses that have passed the due diligence process can trade on invoices on the platform. This protects you from any FCPA or money laundering risks. Partner with CAPSA today to sustainably grow your business ecosystem. Visit www.getcapsa.com.
It's such a pleasure to be here, and it's been a great honor to work with the Enterprise Development Center to make this work. We believe this is the first of many to come, and alternative financing has been a topic that has been dear to our heart and is what we sleep and eat. And the sheer success businesses have been able to enjoy by virtue of considering this has made it important for us to spread the word and partner with organizations like EDC to ensure that business persons are thinking and rethinking their financing options and ultimately making their businesses and their endeavors more successful, particularly in these very interesting times in Nigeria and around the world. So it's such a pleasure to be doing this with EDC, and I can't wait for us to hear from our speakers and enjoy the session. Thank you very much. It's such a pleasure to be here.
Good morning, everyone. Just to add that I have a doctoral degree in entrepreneurship from Walden University, USA. Today's topic is very important. Over the years, I've dealt with over 150 SMEs by way of offering one service or the other to them. Empowering SMEs through alternative forms of financing is a very important topic. A lot of SMEs, and today also I'm a PDSP, so I interact with a lot of SMEs. Small and medium size enterprises can be likened to the propeller, that powers the engine of a nation's economy for growth and development. SMEs play a major role in the economy of Nigeria, especially in terms of employment growth, productivity, and poverty alleviation. As the government has stated, they want to lift 100 million people out of poverty in Nigeria. So one of the things that can help them is promotion of SMEs. And in Nigeria, SMEs are confronted with a lot of problems: inadequate access to finance, inadequate infrastructural base, and so on and so forth. But access to finance is vital to business startup, development and growth for SMEs. So lack of credit facilities has been identified, like I said, as one of the principal problems confronting SMEs in Nigeria. And in order to boost the SME sector, I've said, like they have also mentioned, that Nigeria is the world capital for that has the highest number of people that are poor all over the world. That Nigeria has the highest number of people. So SME is very important to help lift people out of poverty. Now, from our conversations, various conversations, we have seen that lending from banks is the most familiar of external financing for many SMEs. SMEs raise funds from their personal savings, which we also call bootstrapping in modern day language. They raise money from families, they raise money from friends, and traditionally, they also raise money from banks, and this poses a lot of challenges. For example, issue of turnaround time is critical. Some of them have lost businesses because they were not able to get funds on time from banks. Expensive funds, for example, if you are talking about manufacturing, an average manufacturing profit is just about 5%, or let's say maximum 10%. And banks, traditional banks, are lending at double digits, 24%, 30% at times, all inclusive. So traditional bank finance pose a lot of challenges to SMEs. Also, issue of record keeping and a lot of other issues, bottlenecks, makes traditional form of lending very difficult for SMEs. No track records, the pricing for them is too high because of risk and so forth. So the other thing is to look at the issue of alternative source of financing. And maybe we should, I will mention some of them, then very soon I will close so that we can have a robust discussion. People can ask questions. So I won't spend too much of our time. But what I'm saying is that there are alternative ways of raising funds today. I've done research on one or two of them. Issue of crowdfunding is becoming popular in Nigeria. Some SMEs are raising money from through crowdfunding. Also, there is a startup incubator accelerator. Some private, some individuals are now going into this, and it's also a way of raising funds because equipment are provided at the incubation centers. Administrative equipment are also there, apart from manufacturing equipment. These are some of the things that makes also incubator accelerator alternative source of funding attractive. Then peer-to-peer lending is also important. Also, the collaborator for today's meeting, they do invoice financing. Invoice financing is based on transaction. And with that, some of these, this way, the company collaborating with EDC on this program can fast track things. You can get money within 48 hours to finance whatever supply you want to do. But the issue of track record, the issue of the company you want to supply to, their reputation are very important. So there is still a kind of limitation there. So, and if you have a good track record with them, then the interest rates and other charges will come down. So that's another source of alternative financing. Then purchase order financing, subscription models is also another source of financing. Then milestone financing. Then today, one of the things that is becoming popular in the society is grants from religious organizations. Some religious organizations just give grants to their members and even to some other people, though the money may be low, but it's also it goes a long way in financing small business. Also, alumni grants from secondary schools are coming up and saying that yes, the people that finished earlier, they have the means and wherewithal to support small businesses, especially for people that are just starting life. So they give them funds. That's another source of funds. Now, as I begin to round up, the following issues are very important to me, which I want us to consider along the way. How does an SME determine the capital needed for its business? at any particular point in time? How do they determine? Because you find out that some of the SMEs, what they need is not actually funds. They need to be well organized. Yes, if they are saying hypothetically they need 10 million naira, what they actually need may not be more than 2 million naira. So the determination of the amount needed is also very important to me. Then another thing is how to access existing loans and grants. There are some loans and grants, especially loans that are not expensive, and you know, grants is just there is no financial obligation attached to it, rather than other than to get the money. How to access existing, because today, if you read literature, there are many of these grants that are available and access to them, and even loans. But people don't actually access them. It will be interesting to note, to know the percentage of funds accessed. For example, all these DBN loans and so on and so forth that government has put forward, what percentage has been accessed so far in the last 1 to 2 years? It will be interesting to know. What is happening is still, do we still have bottlenecks in accessing these loans and grants? And where will this, when we are talking about this new or this alternative source of funding, do we still have these bottlenecks in accessing these grants and loans? So exploring the creative ways, this issue of creative ways of sourcing for capital should be publicized. That's another concern for me. How will people know? We thank God for this kind of publicity that is being done through this forum. So we need more of that, especially for people in rural areas, people in core SME that don't have access to information. How do they hear about some of these things? Another thing for me is improving the turnaround time between the time people apply for loans or grants, then approval or rejection, so that they know, and the disbursement, as the case may be. Then another concern for me is utilization of these funds by SMEs. At times, it's even easier to get these loans, but to channel it to the right usage, for the purpose for which the loans were applied for, or the grants. It's also very important how the issue of monitoring. Then capacity building. You find out that at times money is not the issue. The issue is how to manage business. How to manage business. Because if you know how to manage business, then you may not find it difficult. And at times, you give somebody money to solve a problem of 4 million, the person maybe was able to get 10 million naira, 9 million naira will just go down the drain or diverted to other things. So capacity building is very important to me. Adequate publicity, like I have said. Now, the last one that is important to me is a bit of gender balancing. I don't know whether people will agree with me. Most of the loans and grants outside there, they are women biased. So I've not seen anyone that is exclusively for men. Yes, we may not be that, but most of the other ones have been biased towards women. So let me just stop there so that we can deepen our discussion on this topic. Thank you, Mr. Moderator.
It would be nice to get opening remarks from everyone in the panel, and I would like to start from the order I presented everyone. So, Mr. Muyiwa Fagbola, let's have your opening remark. What are your thoughts on alternative forms of financing, for SMEs?
Thanks for having me. My name is Muyiwa Fagbola, and I run Erich Oil and Gas, and of course, a couple of the companies like Parkments and Suits and Erich Global Concepts. In our environment, which we work these days, it's been challenging, but of course, it's dynamic. it has continued to witness high rates of inflation, which further reduces people's disposable income, cause unstable government policies, frequent change in CBN monetary policies, unemployment rates, serious challenges in power supply, of course, insecurity, and the high level of corruption in the country. But however, these are the challenges, the environment within which we have to continue to operate and conduct our business profitably. Now, access, the decision you have to make in accessing funds will depend upon so many things, like the cost of borrowing, length of time the money will be needed, what's the purpose the money meant for, and whether we can pay back. Like so many SMEs, deciding on the source of funding will depend on you striking a balance within equity and debt to make sure that the source of finance suits your business. Just like Dr. Olufemi Aladejebi had said, there are two major types of funding, internal and external. Of course, the internal starts from the bootstrapping, using your personal funds, the sweat equity, family and friends, which are some of the things that we did when we started our business. And that comes for the internal one. And of course, the external one, we begin to talk about trade credits, venture capital, grants, which I mentioned over that. And of course, the invoice discounting, loans too. We started with bootstrapping, using our personal funding, and of course, revenue. And of course, we moved to the family and friends who probably want to have a stake in the business, trying to look at a cheaper cost of funds. But because we are deciduous to grow and expand, while keeping an eye on the cost implications, we decided to move into overdraft facility. And of course, we all know the way this works. Allows you to take position. Funds become more easily accessible after the bank booking. And of course, it improves your cash flow. And of course, overdraft facility, we also expected that your account swings from debit to credit. So the account is debited while interest is charged on paid and on utilized funds. But in view of our own nature of business, which in most cases require that we grant some credit to some of our off-takers, we begin to have a lower days receivable turnover. Hence, the need to again change our funding strategy to improve on the cash flow and still retain our off-takers. We needed to convert our receivables into cash and of course continue to operate. To do this, we opted for invoice discounting at a cost. As I said, in view of the low days receivable turnover, it's probably will be difficult for your account to swing from debit to credit, which overdraft facility requires. And of course, certainly, you have to have a lower, you cannot but have a lower turnover on your accounts. Hence, the possible challenge that it may not be likely that even your conventional bank will want to do invoice discounting for you because they will be working on what has been your turnover. However, you want to continue to be in business. Even when the banks want to do for you, conventional banks, you want to give additional security to increase your OD line. We have the required turnover on the account to justify this OD. How many days or months will it take for injection or for approval, and of course, for disbursements? And this is where CAPSA comes in. Our relationship with CAPSA for about 2-3 months has been quite impressive. it has really have a dynamic turnaround on the accounts. And in terms of reliability, prompt and efficient service delivery, in invoice factoring and at a reasonable cost, without any collateral or tedious process that's typical of the conventional banks. Our experience, as I said, with CAPSA has been quite impressive. And we observed that it is digital, and to set up doesn't take more than 5 minutes to have a complete full KYC assessment, unlike the conventional banks that would take about 2 or 3 weeks. The application is friendly and does not discriminate against requests from SMEs, provided you have a very good anchor. The turnaround is also wonderful. Within 24 hours, maximum of 48 hours, you've been able to process your invoices and begin to have your fund back into your accounts. You can go ahead with your business. This is not possible within a conventional bank, which will probably take 3 weeks or 4 weeks. And at the end of the day, you will even be asked that the request is declined. The major thing in CAPSA is that you don't have to drop or put down any collateral. There's nobody that want to get the money in the bank without dropping in collateral. Either you want to use your shares or your property, which is not possible in any conventional bank. But in CAPSA, you have that opportunity, and you begin to unlock your invoices, which you supply, and have the money to continue your business. So, SMEs, we have to improve. We have an improved cash flow, as I've said. It makes preparation of financial planning smoother. It's effective and cost efficient. And of course, by subtracting this area of business, and it reduces your time choosing payments. As I said, I would advise that each firm or business should choose the most appropriate source of finance that suits the mode of operation and the kind of business you're doing. But when it comes to discounting of invoice, and from my own experience dealing with CAPSA, I think you have a good bet with CAPSA. So, Mr. Moderator, I want to stop at this junction and possibly wait for further questions. Thank you, Mr. Moderator, for having me.
Already sent even before now. So please, let's just stick to 3 minutes. The next person I'll be calling for his opening remarks is Mr. Kayode Momoh, who is the procurement manager at UAC Foods Limited. Please, sir, let's have your opening remarks. But please stick to 3 minutes. Thank you.
Thank you very much. As an organization, in relating with SMEs, traditionally, when you have contracts or purchase orders that SMEs are qualified to execute, usually we do not want to advance the SME with money. So we usually want to issue a purchase order that will require the vendor to pay in 30 days or 60 days and 45 days. So usually this type of requirement would need the SME to source for funding from the various areas that have been mentioned earlier on. And usually sometimes it affects the profitability of the SME because the cost of funds is between 25 to 30% for banks, and then for other financial institutions it's even higher when they have to pay in days. So, and then for an organization, we also try to manage our cash flow. So we'll look for the longer payment days that would ensure that that cash that we are trying to manage is utilized for other business needs. Because as they say, cash is king, and this is even more important in this post-COVID era where cost of materials has gone over 50 to 100% in the last 1 year. So you are trying to manage the cash that you have, and you also want to execute a number of jobs and a number of purchases that would ensure that the business continues to remain a business running concern. So looking at all these challenges, we begin to look at what are the alternatives, what can we do to help the business and also to help our suppliers and our customers to ensure that we have a solution that results in a win-win situation. So I'm not compelled to pay vendor within 7 days or within 14 days, or in some cases, make advance payments to a vendor, which in most cases, the vendor will be required to bring in an advance payment guarantee from a reputable bank. And most times, the advance payment guarantee is not which enables us to advance payment to the customer, is not even given to the customer by the financial institution. So they still need to source for funds. So this now brings the case of what are the alternatives that we can use. And then in recent times, we've gotten a couple of organizations that say, okay, they have a platform that can link suppliers directly to funders. So in such a way, you are eliminating the need to source for funds from the banks or other financial institutions. So one of the interesting ones which we've seen and we're about onboarding is CAPSA. They have this brilliant solution whereby we as the anchor would link our suppliers to their platform. So we know the suppliers have been vetted by us, the KYC is done by us. So, so for a typical supplier that has a 30 days payment term on his purchase order, so with this platform, you can request to be paid in 2 days or earlier than the 30 days. So instead of having to repay back a loan for 30 days, he can easily source for funds that in 2 days is able to get value for what is done. And then we as the anchor will pay CAPSA in 30 days or whatever payment term that we've initially agreed with the vendor. So with that, we're able to manage our cash flow. We can also even use that to extend the payment days that we have with our vendors. So if we have vendors that are on 7 days payment terms, which is already an hindrance to our cash flow, we can extend that payment terms to say 30 days, because we know that with CAPSA, the vendor can be paid in 7 days, and then we will now pay back to CAPSA the invoice value in 30 days or in 60 days, as the case may be. So, so those are the kind of alternative solutions that that are available now that can help in ensuring that you have a better business relationship with your suppliers.
Right, that's great. Let's also get the opening remark from our next panelist, and that will be Mohammed-Bashir Yunusa. We are sticking to 3 minutes because we still have an Q&A. So, Mr. Mohammed, the floor is yours, sir.
Okay, good morning again. A lot has been said by the co-panelists. And yes, starting a business is not an easy feat, especially in an economy like ours, right? So you start up with your personal capital called bootstrapping, you get to family and friends, you find loan sharks, then you eventually get to debt funding from the banks, which is not really easy to come by, right? And with businesses, there's always this notion we always fail to see. businesses need long-term capital, but the capital available in the market today is short-term. So how do we bridge that gap? In bridging that gap, that's where we talk about alternative means to capital raising, right? Debt, equity financing, whatever you can find, or a mixture of both. And fortunately, we live in a very interesting world today where we have fintechs coming to help bridge that gap. And you have different financing models today, like what we have seen being created over time. This gives businesses access to more patient capital. And with patient capital, you're able to grow and you're able to, at least at some point, start paying back on equity. So usually I advise businesses I work with or I know, you need to structure yourself and make yourself available for this patient capital or structured capital or fintech capitals to find you, right? One thing that can help you do that is expose yourself to the knowledge available. So you need to be knowledgeable about what is happening and where to find these accesses. You need to understand your business and understand the kind of capital that is good for you short-term, middle to long-term. Essentially, I would always hinder on business knowledge. You need to understand what's happening in the environment. You need to know the kinds of capital available to you and also explore. We have different forms of capital other than the conventional and traditional banking that we all know. Fortunately, we're having non-interest banking come into the economy today, and those are focused on risk and reward sharing, which is a very good way. And I would advise small businesses to read into that, learn more. There is a lot of fintechs coming with solutions that can actually save and help you instead of looking for long-term or short-term capital that will put your business in more debt. Explore these options. And generally, genuinely, what I'll always keep saying is knowledge. Let's seek more knowledge and let's find these opportunities.
So,
thank you.
Okay, thank you very much, Mr. Moderator. The other panelists have said quite a lot about alternative financing. From the legal perspective, which I'll be speaking from today, you will agree that you will agree with me that it's quite difficult to access funding through the traditional bank, traditional form of financing. And as a result, there are a lot of stringent rules and regulations being put in place by the regulators and also the funders themselves. And as a result, you find it is difficult for borrowers to access funds. And even when the funds, sometimes because of the time frame where when you apply for these funds, you find out that at the time the loans or the funds are available, you are not even in the position to use the funds anymore. So it's actually it doesn't encourage the borrowers to borrow money from the traditional channel. So from the alternative financing, you could see that as a law firm, we advise all parties. We have clients that cuts across that falls under the traditional finance, the financial institutions. We also have clients that falls under the SMEs. And we also have clients that also borrow money from both parties. So we try as much as possible. We look at what they have and advise them on who to meet and the project they want to finance. So far, so good. Working with CAPSA has given us, working with CAPSA has been very smooth, helping them to onboard most of their anchors, the funders, the borrowers and all that, and helping them with their documentation. You will find that the rules are not as stringent as the traditional banking rules, and it's within the shortest possible time as funds are made available to the borrowers for them to be able to carry out their projects. And it's one advantage over the traditional banking system. So based on that, I think and also we also look at the laws. The laws are there to help, to guide the borrowers to ensure that the alternative finance platform are comfortable enough for them to onboard and do their business. Thank you.
More detailed explanation. So fantastic. Invoice factoring / invoice discounting, and why is that a strong form of alternative financing that you recommend to any SME on this call?
Yes, invoice discounting is when you look for a party to pay you in advance before your principal pays you or the person you have worked for pays you. And I will share an experience quickly. Even when we are talking about this invoice discounting, I used to have a client that was using this invoice discounting at the time, not the modern one now. She was using one traditional bank then. And you discover that it was a ripoff. They will give her like 75%, maybe 60% or 75% in advance when she submits her invoice. Now, at the end of the day, the interest rate is so high, and but the modern one, like I had a discussion with CAPSA, and they were telling me their kind of charges, which is very reasonable. But to cut the long story short, to go straight back to your question, invoice discounting is when you submit your invoice to like a bank or a financial institution, and they give you advance payment when before the time you are supposed to get paid, and eventually the person you have transacted business with will just pay directly to the bank. That is invoice discounting. Then the other form is purchase order. You can get money from without your own money. You can walk to a place like CAPSA and they give you money to do your business, as long as the party that is giving you contract is a credible company that can be relied upon to keep to the terms of the contract. Thank you. I don't know whether I've answered your question.
Okay, that's fine. I mean, you really brought it home, you know, how you spoke to invoice discounting and also linking that to purchase order financing as well too. So many thanks for that. I've also been told that at some point today, we're going to hear from CAPSA. There's been a lot of reference to CAPSA. So we're going to have someone from CAPSA also speak to us on what their offering is. There's been a lot of people alluding to CAPSA and how that they provide some form of alternative financing. Okay, so let me take another question for a member of the panel, and this is for Mr. Muyiwa Fagbola. So a question has come in that says, we're in a current, I mean, given the current economic environment and how tough it can be to access finance, so someone is saying, have you been able to access the needed financing in your business? So let me also stretch the question to say, are you very comfortable with your financing structure? Because the question really is, how are you able to access the financing you need for your business? So just stretch that response to include if you are happy, you know, with and accessing the optimal level of funding you need in your business. Mr. Muyiwa, check your mic. We can't hear you.
Hello?
Okay, yes, we can hear you now. Go on.
Okay, great. I said, as we have earlier said, we have a running facility from the bank. And that is one way of running our business. The other side of it is to also work into the fintech, with the fintech company that's in CAPSA. In view of the fact that, which I've said earlier, we have to grant credits, and in most cases, you may not likely get a discounting facility, invoice discounting facility from the bank. So there are two ways. So that you begin to have a higher days receivable, so that the period within which you get your fund back is short. If it's short, you can have more turnaround and you can go back to your business. But in the event that you have a lower one, it means that you have to have a way of financing or refinancing your business. And that's why I say we approached the fintech company, CAPSA, and we were able to get this invoice discounted, so that we can begin to have money in the industry on a regular basis to refinance or to continue our business. So that's basically is what we're doing, and we do it regularly with CAPSA. I hope I've answered your question, Mr. Olotu.
Okay, that's fine. So you currently utilize bank financing, and you also utilizing some sort of invoice financing using CAPSA. Okay, I have a question for Mr. Kayode Momoh, and the question is thus, so as an organization, given your role at UAC, how are you able to support your vendors with their financing requirements? If you think about how you play in the supply chain, so how are you able to support some of your vendors with their financing requirements, so that it doesn't come at the expense of service, so that they're able to serve you properly?
So thank you. As an organization, in as much as we give a particular job or service to our suppliers, we want to ensure that they have the capability of executing the job. If not, at the end of the day, it comes at a higher cost because you might need to re-award such contracts. So part of the things we do is so we give different financing options. So based on the payment terms, we have an array of payment terms. So for some vendors, so for most vendors, we try to do 30 days payment terms. So for some vendors, we do 7 days, 14 days, so that with that they're able to get their money ahead of other times. For some other contracts, we would advance the vendor payment, and then so since we're advancing the payment, the vendor will be able to execute the job, and then when that job has been fully executed, we pay the balance. Usually we won't advance 100%. Usually we advance a percentage of the requirement. For some other contracts, for like engineering services, we might do milestone payments, whereby you say, okay, this particular project is divided into 4 parts. When you complete 10%, we'll pay you 10% of that sum. When you complete 20%, we pay 20%. And then in more recent times, with the advent of alternative financing, so with the type of solutions that CAPSA has, so what we'll do is we will serve as the conduit. So we'll link the SMEs, the suppliers, with the funder directly. So we'll say, okay, you have this particular job. Currently, your financier is collecting 5% interest per month on this particular on a particular sum of money that you typically would loan from the financier. Instead of that, why don't you engage with this other provider who would give you at a better rate, and then with that you're able to support your business better. So those are the type of things that we are trying to do now, which is to directly link the organization with the funder, link the suppliers with the funder, so that with that they can negotiate their rates, which usually is better than what you get traditionally from the existing financial institutions that you have now. Thank you.
Okay, fantastic. So basically, it's not a one-size-fits-all. So in some cases, you can make advance payment. In some cases, you can do milestone payment. In some cases, you're even happy to help in invoice financing. Okay, fantastic. So a couple of questions has also come to Mr. Mohammed, I guess, of where you work. So you did speak about non-interest banking, and that has elicited a lot of responses on the chat, and one has come in. So people are asking on the call, are you able to finance every sort of business, or provide non-interest banking financing for every sort of business, when you look across major sectors in the economy today? So we have the SMEs on the call, and they vary from different aspects of the economy. So do you want to speak on a broad level if there is a coverage for the sectors that your non-interest banking facility can target? Or are there some sectors that are not covered within the reach of this facility? Do you want to speak to that, Mr. Mohammed?
Sure. So most sectors are deemed permissible to be financed by non-interest banking, especially when you're contributing to the real sector. So most SMEs, as we know them, contribute to the real sector and are very verifiable with what they do: economic growth, employment, and generally value creation. So yes, just a few businesses are not qualified for non-interest finance, very few. And I'm not sure anybody here would be part of those businesses. Then the other thing I would say is, I saw a few questions on how can we access it. There are a few non-interest banks in the country today, I think about 5 or 6. So what you can do is go on our website or visit the closest branch to you, and you get most of the information you need. Thank you.
All right, fantastic. So I think something that makes me happy is he's made a call to say he thinks that everyone here might be able to benefit from that, which is really one of the reasons we're having this, so that we sort of put these alternative forms of financing on display to everyone on the call. Okay, so let's have a question for the lawyer on the panel, and obviously we're going to come from a legal perspective. So if we asked, are there specific legal considerations, when we look at this alternative financing? And maybe a follow-up question for you might be, so how much of the legal perspective, should SMEs pay attention to, when they look out for this alternative financing? So what are the legal considerations, and it's how important, do they pay attention to requirements of the law when they're accessing this financing?
Thank you very much for that question. In assessing funds from alternative financing, it is very imperative that you take legal consideration into perspective, because if you tend to not look at it properly, you might find yourself in a situation where it is unfriendly at the end of the day, when you now have liabilities hanging over your head. So it's very key that you look at the legal considerations before you dive into any type of alternative financing. One of the key things, the consideration you have is you must ensure that the alternative financing entities or the platforms you are using are legal and their operations are permissible under the law. What do we mean? Each party should familiarize themselves with the governing laws and the agency regulating the type of financial alternative financing they would like to adopt. For example, we use CAPSA, who is into invoice discounting. CAPSA, the law that will govern, because there is no uniform legal framework that governs the sector. So each party has a law that governs them. The funders have their laws that governs them. The platform provider also have what governs them, and also the borrowers and the anchors. So for the funders, you must ensure that the funders have their duly licensed by CBN, by the regulators, by SEC, to be able to provide financial services to the borrowers. For the borrowers, you must ensure they are legal entities. They must have duly registered with the Corporate Affairs Commission, also with the anchors. And you must also understand the sector the anchors do their business, to ensure that they are also duly regulated, licensed under their sectors. Another key issue you also look at is CAPSA is a technology company, and we all know that alternative financing are driven by technology. So one of the things that you also look at, one of the regulations that also governs them is the data protection regulation. And you must ensure, in also going to do business, you must ensure that the platform they are using are duly regulated. They do have There are some key things that should be on the platform. You must ensure that the privacy policy is there, the user terms and terms of usage are there. They are not just there because they want to put it there. They are there to give information. So it's important that the people dealing with those things read them, understand them, and ensure that before you dive into any type of financing you're doing. Also, another key consideration you need to look at is the financial terms. It's important that you understand the financial terms that is being put forward by this, by the funders. Like I mentioned in my opening remarks, there are stringent terms in financing, and in alternative financing, it ought to be lesser terms. So you must ensure that the document you're signing is reviewed critically and ensure that there are no stringent terms. You must understand the interest rates they are giving you, the costing, the cost of financing. You must look at are there indemnity clauses? Do you have a dispute resolution clause in there? In the event there's an issue, do I have recourse to the court? Or do I have recourse to an alternative dispute resolution mechanism? All those things you must understand, and these are the legal things you must consider before you go into such any type of financing. Another key issue we also look at is the assignment of rights. Like the anchor, one of the anchors are here, they do sign agreements with their borrowers, with the suppliers. So there's a clause in there that says assignment of rights. It actually limits the borrower. It actually is a limitation on the side of the funders, because you can't assign your rights without the consent from the anchor. So the funders must ensure that these assignments are open. They have the right to assign the funding to them and be able to get recourse at the end of the payment cycle, which they are waiting for. So that's also key. So there are, I think, and a collateral, we also mentioned that collateral is not one of the requirements for alternative financing, which is key to the traditional banking form of banking. So we must also ensure, they must have other key reservations. Look at the funders, are you requesting for collateral? Why are you asking for it? Because what's attractive about this financing is the fact that collateral is not required. So probably now depends on the amount you are looking for, which the funders are trying to hedge their risk and asking for collateral. So those are the things you look at for when you are getting into alternative financing.
Many thanks, Efeomo, and I agree absolutely with a lot of the things you've shared. And just also, sort of reinforce a point you've made. It's important that, especially with fintechs, quite a lot of fintechs are providing this alternative financing, that you do confirm that they are duly registered. I know that the Securities and Exchange Commission, SEC in Nigeria, from time to time has released communique on this, and also in certain cases even delisted some of the firms found operating without a proper registration or a licensing. I know there have been communications and also open communications to everyone in the public, just saying do your due diligence, your background check before you get into some sort of relationships with any of these fintechs offering any form of alternative financing. There's been a lot of communication on the chat around, how do we reach some of the panelists, what I would say is some of them have shared their communication, their contact details on the chat. We'll just say for the rest of the panelists, if there's a contact detail, maybe an email, that people can reach you on for further inquiries, I think the participants will be grateful to have that sort of detail. This is the point where we would like to call in CAPSA. There's been a lot of conversations around, using CAPSA to drive an alternative form of finance for most businesses here. So it's my pleasure to welcome a representative from CAPSA to speak to it a bit, and let's have a better understanding of how CAPSA works. And a lot of questions have come up on the chat on how CAPSA can also support with financing their business. So just a confirmation that we have a CAPSA representative who is happy to take this session.
Hi, thank you very much. Yeah. Can you hear me?
Yes, we can. Please go on.
Okay, good. So CAPSA Technology is Africa's premier digital invoice factoring platform. And we started this off the intent to help businesses to support their working capital requirements. And so far, we've been very successful at it, providing this much needed finance for businesses. We are very aware that finance is the lifeblood of a business. And when we can make finance available, especially at the working capital level, businesses thrive and are able to grow based off this access to finance. And how we've been able to structure this is in such a way that it gives businesses the power to decide what rates works best for them. And how this works is, instead of the traditional financing setup where a rate is pushed to you, you are presented with multiple rates and then you pick what works best for you as a business. And we've leveraged technology greatly in making this faster, easier, and even much better than walking into a traditional bank. And that's the beauty of what CAPSA presents. And like many of those that have enjoyed ourselves, we attest to, it's faster, it's better, it's easier. One of the key things businesses suffer from is a lack of trust. And you can't even be a Nigerian business and not be able to speak a lot to that. The banks don't even trust you at first based on experiences they've had. But we were able to leverage the credibility of your anchor to actually give you access to funding that only persons like your anchor can access. So you have a XYZ Enterprises Nigeria Limited getting rates that only a UAC Foods can get because of their leveraging on the credibility of a UAC Food who owns your businesses. And one of the things we've also try to educate entrepreneurs on is that you need to also invest in setting up your business, right? Invest in the quality of your services and invest in the kind of in positioning yourself to be able to support credible organizations, because it also gives you a fighting chance to be able to access alternative forms of financing. So a lot of education will go into this, and that's why it's such a pleasure to be partnering with the EDC to do this, to be sure that we can encourage and educate entrepreneurs on what it takes to actually have a fighting chance, regardless of how tough the economy might be. Our platform is www.getcapsa.com. I mean, whatever questions, specific questions you have, you can always put them in the chat box and someone on the team will be able to provide additional clarity. Before the end of this session, we'll probably we'll show a video that will just show you the end-to-end process of how CAPSA works. Thank you very much. Hope that helps.